Hey everybody, how we doing? Chase here. So let's get started here on the daily. We can see that we are making higher lows as the day move on, as the days move on, but we're also seeing that we're making lower highs as the days move on. So we're consolidating a bit here as expected. We're sort of in this choppy range. Let's see here. We pull up here on the 4-hour, we can see that we're really sort of stuck, right in this range. A lot of consolidation in here, gearing up for the next move. The problem is, and we'll talk about this more, but the problem is, if you look for a long position here, obviously we can see that the supply is being tested more and more, right? So as we know, the more we test the supply, the more likely it is to break. But at the same time, longing into resistance is never something that I've been a big fan of. I more or less like to wait for some type of a confirmation if I am looking to long north, and I'll show you what I mean. We can just take a look simply down here, right? Let's take a look at this. This was the old price action here. This line's a tiny bit off. It should be right there. Okay, so we can see how the price was constantly getting rejected, and we had all this supply up here, right? So this is all supply up here, and we're getting constantly rejected by the supply, and we never had a candle close above this resistance line. And then look what happens here. We get confirmation. This is a candle close above the resistance line right here, okay? And if you were in my old group, they'll vouch for me. I had put this idea out before it even happened, and I said, hey, look, if we get a 4-hour confirmed candle close above this resistance line here, it is a potential long opportunity, although I did mention that it is quite risky because I'm never a fan of longing into resistance. So if I am going to long into resistance, or I'm going to see an opportunity to long into resistance, I'm not going to long down here. I'm not going to gamble and say, okay, well, I think it's going to pop through this time. I think it's going to pop through this time, because you could have done that here. You could have done that here. You could have done that here. And you just could have thought it was going to pop through every time, and you set your stop, right? Okay, you're stopped out, you're wrecked. You're stopped out, you're wrecked. Okay, why are we and maybe even some people were predicting it here, they got stopped out again, they got wrecked. Why do we need to jump into all these positions rather than simply waiting for confirmation right here? It's literally all you needed on this chart was one single line showing where we never had a 4-hour close above since we started ranging in this level, right? Because we're not counting this, because this is sort of like the dead cat bounce coming down from this massive dump. So we don't look at that stuff. We just look at the range and the consolidation, and we saw we never had a 4-hour close above this level. Like I said, make sure that line's accurate. This was I had an actual chart with it. Let's see where it was. Yeah, it was this one. Okay, so on this chart, everything's accurate. So we had a no closes above, and then once we finally get this close above here, this 4-hour candle close, that was confirmation. If I was awake, I would have opened a nice little long right here. But like I said, for people who were in my old group, they will vouch. This was a potential long opportunity. I wrote it all out. Everything was clear as day, and there you go. So that's your confirmation. There's your moon. And that's what happens when you're consolidating in a range for a long time. So what does that sort of say about right now? Right now it's sort of just it's ranging, it's choppy, and sort of what does that mean? Let's talk about that. What is chop, and what does it mean? Well, we can see right here. If this is sort of a scalper's dream, right? So if you're a scalp trader, and this is something you're okay with, and the type of risk that you're okay with, you can easily set up 2 boxes here on each side, and you can say, okay, well, this is the bearish area of resistance, this is the bullish area of support, and every single time one of these wicks comes into this box, you can long. every time one of these wicks comes into this resistance area, you can short. And all you got to do is set up your stop loss right above the level. So stop loss there. Let's use my colors I usually use. Stop loss there and stop loss here. And you would have, let's see, so far you would have 1, 2, 3, 4, 5. Let's count those all as 1, 6, 7. Okay, so far you would have had 7 successful plays if you simply have, if this is the type of action you're willing to put up with. For me personally, I'm not a big fan of playing moves like this because I just, first off, it's not that they're too small for me, because I do like trading the smaller time frames as well, but I feel like there's not much rhyme or reason to this chop. You know what I'm saying? It's basically what it's doing is they're looking to stop out over leveraged traders, chop up people who are trying to seek a good risk reward scenario, and that's what I'm always trying to do. We can literally see, I set this chart up, this is the average price of the chop, okay, aka we're going to call it the norm, and all that happens is they moon it, returns to the norm. So people get stopped out, it returns to the norm. Goes down, returns to the norm. People get stopped out, it returns to the norm. It drops, people get stopped out below the support level, it returns to the norm. And then it just continues on and on and on. Why do you want to be a part of this price action? Okay, if you do feel the need to be a part of this price action, then by all means, I'll post this chart and you can utilize it. Just understand that the more that a range develops here, and the more times we're going to test supply, right, the more likely it is that eventually a side is going to break. So I found that typically once you can really start to identify these ranges are typically when the market decides to move, because why are they going to let you profit off all these easy moves? It just seems to be what I've found over time. All right, so talked about the daily. Like I said, the daily close here, lower high, higher low, body is pretty much equal on both sides. Obviously, if we're talking about a doji is typically, just a very small body in the middle, but this is a candle of indecision as far as I can see it. Because like I said, lower high, higher low, and the body basically just sort of closed in the middle here. So I see that as a candle of indecision. When we are looking for clues in this area, like we're looking for bullish or bearish signs of confluence, we can definitely start to utilize things like bull or bear div, bullish or bearish divergences. Check out the video in the education if you're not sure on them. But we could take a quick play right here. If you were active and scalping this channel and whatnot, or this range, so to say, you have a higher high on the candle close here, right? You have a lower high here on the RSI, so that shows us that the buy strength is actually weakening, but the price went up, so that's when you would get a short. You can see that if you entered right upon the formation of this bearish divergence, you were good for 113, 115 points. Okay, so those little types of plays, I would sometimes make. It's just, at the moment, sort of as Trooper has said as well, we're sort of giving some respect. Sorry if you're hearing my dog barking. We're sort of giving respect to this new potential structuring, that the market is following, because I would say today we look a little more starting to look a little more like the old times, just looking like stop runs and whatnot. But we're not seeing that sort of the BART algorithm pattern yet. We're still sort of in new waters, so to say, as I talked with sort of my surfer analogy yesterday. So something that we're respecting, something we're keeping an eye on. In terms of future opportunity, I'm still sort of in the same boat. If this box was to, sort of break down here, you know, it could signal a short position if you want to utilize a tight stop loss right back inside, but it's not really recommended. Okay, let me explain why, guys. Definitely, you know, it comes to a point where, you know, every trader can start to get impatient, right? And but we do have to recognize that we are in the center of price action right now. Okay, this is resistance, right? This is our strong resistance, and you know, around here is our support, and down here is obviously our old strong support where we had strong resistance, now turns support. Where do we get this range from? Right here? We get it from right over here, as we found support once upon a time. Okay, so we're dead in the center of the range. So what kind of risk reward are we talking here? To truly, you know, like let's say we're working from the middle of the range, and this is a long position here. It's just the first thing we pulled up. Okay, so we're in the middle of the range here. We have a long position, and where can we see that you know, a stop makes sense? Well, I suppose a stop would make sense. You know, you could look at this swing low here. If you want to be, you know, a little safer, you can go a little closer by some of these wicks. And where's your target? Well, this resistance hasn't been broken yet, so I suppose this is your target. And look at your risk reward. It's below a 1. That's think about long term. You know, if you're trying to be a long term successful trader, how can you know, expect to have long term success if you're taking trades that have a risk reward of a 0.92? All right, and even, you know, let's be generous, and let's say we're going to take out. Or, you know, we're going to meet this old resistance up here. Okay, this is where this sort of strong resistance begins up here. Now you have a 2.15 risk reward. It's better, but once again, it's still only 2 to 1. You know, and like I said, when I'm looking for risk reward, I like to look at least 3 to 1, at least 4 to 1, and that's just not something that you get from the middle of a price range. Okay, so. You know, and I know it can start to seem tedious perhaps, but you know, let's take a look. I'll show you a prime example. If we come up to this range, perhaps, you know, we find some nice confluence. We find the downtrend line, all right, coming from a long time ago. So we see we have this downtrend line of resistance. It'll be our essentially first time testing the supply. You know, besides, you know, the sort of dead cat bounce situation we had over here before we drop much farther. Okay. It'll be our first time testing the supply in a while. We have the downtrend line. We have the strong resistance from here. We also have other confluence like VPVR and whatnot. And we'll take a short position here, and we'll say, let's see, our average entry, or, you know, if we look for them to run the liquidity, we know where the liquidity is. It's right above the local, the swing high over here that we have mapped out. So that's our liquidity. And let's say if we wanted to do a short position here, and we did an average entry right within the liquidity, put our stop loss, you know, we could do either above the resistance here is a little, you know, wide for my taste. I would probably be looking to go a little bit above the, you know, downward, the downtrend line, you know, that's been stemming since the beginning of the year. And that'll be a stop of about 110 points, and you could at least be targeting at this point, you know, a retest of, you know, this resistance, this support level here. So once again, you're at a 2.35. It's not the best, but at the same time, you know, if we get a harsh rejection off this, where would we really be targeting? We could probably target a bit lower, at least to the center of this range, which we'd be seeing a 3.52 risk reward, or, you know, targeting even as low as, you know, somewhere 72s, where we're talking more of a 5 risk reward. Okay, so it's often about finding situations where we're going to have a really good risk reward, and you know, that's going to be key to long-term success. And, you know, like I said, finding that bullish or bearish confluence that sort of influences it along the way, like how I showed you guys this bearish divergence here. Okay, that was the first hint of a bit of a drop, but since we're just very much chopping around here, you know, that's sort of just how the price action is. It came down, it you know, it the bear divergence sort of played out, like I said, for about 115 points, and then it just bounced right back up for no reason. It's just chop, okay? And you have to be okay with that. You have to be okay with, being patient. If you're not patient with the market, it's going to ruin you over time, and you really won't get that chance to, be successful long term. And I think a lot of it stems from, and once again, sorry if you're hearing the bass music now, but I think a lot of it stems from, outside influence, so to say. You could see people on Twitter saying, oh, well, we're going to 11,000, we're going to 13,000, or we're going to 4,000. And, like I put in the words of wisdom, and I really think it's something to understand, recognize that all these people that are giving you these, insane, let's say, or really far out predictions, understand that they're putting their bias on you, okay? What they're doing is, they didn't sell any of their Bitcoin, so they're predicting 11,000. Or they sold all their Bitcoin, so they're predicting 4,000. My personal strategy has always been to try to, sort of split up my portfolio. I used to do 33% Bitcoin, 33% altcoins, 33% fiat, basically all the time. And sort of once I saw altcoins, getting ugly, and sold a lot in May, took a lot of profits from those, and that percentage went way down. And I did my big sell. My first big sell of Bitcoin was around 17,000. My second big sell was around 7,000. So for me, it's always been about, just maintaining sort of this 50-50 scenario with Bitcoin. So if the price happens to moon and it wants to go up to 100,000, that's awesome. I have Bitcoin, okay? If it wants to go down to 3,000, that's okay. I sold a lot for fiat. So you don't want to listen to these people who are extremely bullish or bearish or snarky in their every time they talk about the price, okay? All they're doing is trying to influence. It's like an ego thing. It's a subconscious thing. They're trying to make themselves feel better that they're holding all their Bitcoin, or they're trying to make themselves feel better that they sold all their Bitcoin. So the best thing you can do is have a balanced portfolio, and that'll make you completely unbiased in general, because you can be happy if it goes up, and you can be okay if it goes down, because you own Bitcoin and you have cashed out a lot to fiat. There's literally no better way that you can do it, in my opinion, as I've learned through experience and being in this market for a good amount of time. Okay, so once again, just overall, looking for a reaction around this level, looking for a reaction around this level. If you want to trade the chop in these boxes, you can do it, but am I recommending it? Not really. I showed you where you can sort of put your stops, but if it goes bad or something, then I'm not going to say I told you so, but I'm just showing you opportunities for those who are very bored and are maybe perhaps more experienced and okay with trading choppy scenarios. But it's not for me. It's not something I'm going to do. I'm going to be patient and wait for the move that looks good for me. If we come up and we finally get our test up here, I'll see how we react. If we come down here and we get our test down here, I'll see how we react, and that's when I'll look to find my position. Okay, so hopefully that's informative. Hopefully that says a little bit about being patient in the market, and like I said, sort of the more that you try to go out of your way for the market, the more you try to chase the setup, or you're cutting off your sleep in order to try to find a setup, and you're approaching the chart with a brain that's not fully functional and at its peak, because you're cutting off your sleep and you're setting all these alerts and everything, and it's random, guys. The move's gonna come at a random time. It's not always coming in the morning. It's not always coming at night. I've done that in the past. A long time ago, I used to have sleepless nights. I used to say, oh, okay, well, all the moves are happening in the morning. I'm changing my schedule to the morning. Guess what? Changed my schedule to the morning. A few days later, all the moves started happening at night. Okay? Trust me, it's random. The more you're going to chase the setups, and the more aggressive you're going to be, the more the market is going to, chop you up, so to say, because that's exactly what this is. This is chop. Be patient. We'll find a good spot. And that's how we got to move forward, okay? Thank you very much, everybody, and have a great night.